来到 CNBC 全球科技大会的现场，我们将很快开始会议。对于中文的听众，请戴上您的耳机。收听中文翻译，请调整到频道1；收听英文翻译，调整到频道2。感谢您的配合。欢迎来到 CNBC 全球科技大会的现场，我们将很快开始会议。对于中文的听众，请戴上您的耳机。收听中文翻译，请调整到频道1；收听英文翻译，调整到频道2。感谢您的配合。
Phones, infrastructure, even our homes. Artificial intelligence is increasingly present in our everyday lives. This is the fourth industrial revolution.
This is now the most powerful force in the world. It's going to change everything, economics, society, culture, politics, more than anything else.
But with the revolution comes disruption, and nations and businesses across the world are striving to stay one step ahead in the global AI race.
In 10 years from now, I think all our products will be connected and they will be intelligent. We have excellent researchers here from all over the world.
The future of beauty will be more and more about technology, about quality, about formulation, about individualization, about digitalization.
Artificial intelligence will change the way we live and work.
The role of AI is to help you becoming more efficient and more productive.
But as the technology gets progressively powerful, questions regarding ethics become more and more prevalent.
I firmly believe that we shouldn't try to replicate our brains. So the idea of replicating an imperfect thing that has biases, that has prejudices, that will harm others, that's what scares us about AI.
If one day we get to the ability of creating something far smarter than us, then how would we ensure that it stays on our side, that it actually does what we intend for it to do?
This technology is so important, it is so subject to both good and bad uses, that I believe it's going to need a level of government regulation. I don't think we should just sit back and say, oh, leave us alone and everything will turn out all right. This technology is more powerful than that.
Morning, everyone. How are we today? Welcome back to the third and final day of CNBC's East Tech West. Give us a woo if you're feeling bright-eyed and bushy-tailed. Woo! Give us a woo if you're feeling really bleary-eyed after a big night last night. Oh, good. Okay, we're more in the bright-eyed and bushy-tailed camp. That's really good to see because we do have a really action-packed morning for you. Morning, you heard it right. We're only going to be going until lunchtime today, but we're going to cram a whole lot of stuff in. We're going to be talking about AI, big data, cybersecurity, hardware, software, future of travel, you name it. We are going to pack it all into 8 sessions this morning with really incredible speakers. What were some of the highlights last night? Anyone want to volunteer something that they really enjoyed last night at the gala dinner and afterwards? What about those iPad band players? You know, the guys who were playing the iPads, but actually it sounded exactly like a guitar. I feel like Jimi Hendrix would have been turning in his grave. And the 13-year-old singer, Elizabeth. So some really fantastic futuristic dancers as well. I think it was a really wonderful night that our events team put on, so they've done a wonderful job. Thank you. So you might notice if you look around that the room looks a little different. That is because it is a little different. We're doing something a bit more intimate today. So we're going to try out some engagement between you, the audience, and the speaker up here on the stage. Not all of our speakers will be taking questions, but some of them are very keen to answer any questions that you might have. So when they're speaking, we'll let you know, so you can sort of start thinking about some of the things that you might want to be asking them at the end. Okay, without further ado, shall we get into the program? I'm going to introduce now the first speaker and host of the day. Jeff Cudmore is the host. He's actually been burning the candle at both ends. You might have seen him this morning. He was on Squawk Box from 6 a.m. and he was up. Am I allowed to say you were partying last night, or would that be letting them in on too much of a secret?
working.
He was networking.
Yeah.
That's right. He was working last night.
Yeah.
So we're very pleased that he's with us this morning. He was modeling for his AI replacement this morning as well. I think probably in the future we're going to be doing Squawk Box with the Jeff Cudmore 2.0 robot.
Then I can have a lie-in.
Then you can have a lie-in,
Yeah.
Exactly. And our guest this morning is Ben Harburg, the managing partner with MSA Capital. So MSA Capital is a Beijing-based venture capital firm. It's invested well over $1 billion in countries like the US, here in China as well, in areas such as mobility, consumer internet, genomic sequencing, and a lot of other businesses. So we want to know what is going to be next on his shopping list. And for that, Jeff, I'm going to hand it over to you for the honors.
Terrific. Thanks very much indeed, Mandy, for that. And you are a living, breathing example of survivor bias because you're all here and there are a lot of people that aren't. But you get the opportunity to speak directly to Ben, which I think is tremendous. And thank you so much, Ben, for giving us that chance. Before I open up to the floor, though, I'd like to just ask you a few questions, if I might. And can I just start by getting some thoughts from you around this G20 Argentina meeting coming up? Obviously, there's a lot of uncertainty and nervousness about where this China-US trade story is going. In your world, what difference is it making at all to the way you think about investing into Chinese technology companies?
Yeah, well, I think that regardless of what happens in Argentina, the expectation is there's a hard reset going on in relations between China and the United States. And so I don't think that'll necessarily change if we're able to assuage some of the issues around trade deficits or issues around technology transfer, IP theft. What's informed our investment process as a result of these developments is certainly a more heavy investment in core technologies. Certainly events like the banning of selling components to ZTE and some of the now discussions around displacing a lot of the kind of higher-end manufacturing supply chain out of China will certainly cause us to continue to work to develop native industries. And so over the last few months, we've certainly done more investment into chips, into robotics, machines, things that would be developed organically, domestically, and will have a lot less dependence on U.S. inputs. And in the long term, I think that's going to benefit China's own chip, own supply chain, and also their targeting of markets ex the United States, so Southeast Asia, Middle East, Africa, Europe, otherwise.
Which is a very sad outcome if a lot of these innovative business models are not going to make it into the US market. But can I just expand on that? Obviously, you're based in China and you're investing in Chinese companies to take their business out of China. How and why?
Yeah, so
I mean, this is a big market. Why do you need to go and look at some of these other locations? And if you're doing it, how are you doing it?
Right. So more and more Chinese entrepreneurs are thinking global from day one and looking to build platforms that are not just useful to China but also globally. And hoping that their business can start to diversify away from the Chinese market. It's certainly a result of the highly competitive nature of the market in China. Folks acknowledge that there are certain geographies where their technology is at a lower level of development and where markets are still relatively greenfield and where there's a lot of white space. And so we've identified a number of models that we think can be exported globally. We think that markets like Southeast Asia, India, MENA are particularly applicable for Chinese technologies because one, the kind of dynamic between government and private sector in those markets is actually more reflective of the Chinese dynamic than the US. Two, a lot of those markets seem to be at a similar stage in their technology evolution, adoption of technologies like China, so kind of a mobile-first basis as opposed to having to unlearn old consumption habits or wean themselves off of PC-based businesses. And third, Chinese business models, particularly these platform approaches where you start with a core product like messaging and then you build off of it to include restaurant bookings and tickets and ride sharing. That model works, and it's proven to build multi-billion-dollar companies in a very short period of time. And so that is a really attractive approach that now folks in those geographies are attempting as well.
How President Trump can say this is not a competitive marketplace, I don't know. I look at the bike sharing story, and we've gone from 40 companies to 4 companies in the space of about 12 months. I mean, this is Game of Thrones writ large, it seems to me, in the tech space. But let me ask you, because you invest in these businesses, and some of them are bleeding, and some of them are bleeding for a long time. When do you decide, and how do you decide that you're going to cut loose and take your losses and move on? What triggers that in this marketplace?
Yeah, so China has historically been a market where scale can often trump product. And so in many of these industries, the key concern is first to get as much of market share as possible, and then to iterate on the product, as well as improving margins. And so we've certainly invested in a few of these highly competitive marketplaces. Bike sharing, we were with Mobike when there were, we picked Mobike out of a basket when there were about 40 other competitors. Our view was that they had a unique set of technology advantages that gave them kind of a head start on the rest of the market, as well as a really strong team of entrepreneurs that had rolled out large-scale businesses previously in China, and therefore were uniquely suited for that kind of a hyper-competitive market. Meituan is another one of our portfolio companies that had to go through literally thousands of competitors in kind of the, particularly in the food delivery market, group buying, in order to get to where they are today, nearly a $55 billion company listed in Hong Kong. And so our view is that largely in China, a lot of that cash burn can be justified along the way to build that dominant market position. But once you're there, you've got to really start to hone margins. And we look at opportunities along the way to take some money off the table, depending on how the market dynamics are shifting, as well as to really help support and direct entrepreneurs to cut off the businesses that aren't working. Meituan is a great example. They practice really kind of a try fast, fail fast model, which they'll pilot a new service, and if it doesn't work, they're pretty brutal about cutting it off very quickly. And so that's how they evolve quickly.
Again, to contradict the president, Uber's come to this market and has done the Didi tie-up. So you can have Western and Chinese companies in this space coming together. You have an investment in Tujia. Is that an Airbnb deal at some point?
It's a good question. We're not only invested in Tujia, we're also invested in a company called Xiaozu, which in some ways is even a closer DNA match to what Airbnb are doing. And we suggested actually to Airbnb management about a year and a half ago that it might be an interesting opportunity for them to acquire. At that point, it was a couple $100 million valuation, maybe about 150. The company just raised a new round about 4 weeks ago at a $1.3 billion valuation. And so I think they're now a little outside the range of Airbnb, and Airbnb have decided to take a different route to try to build organically. I think that Airbnb are going to find it harder and harder to compete in this market, just given the regulatory dynamics around kind of house sharing and the tax and security implications of that. And so I don't think that at this stage, Tujia or Xiaozu, just given their scale, are going to be in acquisition targets.
That sounds like negotiating talk to me, but we'll set that to one side. Look, would anybody like a question? We can open this up to the floor if anybody would like to pop a hand up, and then we can get a microphone to you. Anybody feeling brave? Anybody got anything they want to get off their chest this morning? No? Nobody has a question. Okay. Well, you have a think about it, and if you want to have a question, raise your hand, and I'll bring you into the conversation because we've got some ladies here with microphones. The alternative route, I guess, is the private secondary offering, which we were talking a little bit about before we came on stage. It's not a very well-developed process here in China. Is that going to be transitional, do you think, in the maturity or the maturing of private equity here?
Yeah. I think historically a lot of investors in China recognized that there were great returns in the market, but weren't seeing a lot of DPI, as we call it, some capital return back to them. And so the result was that I think that there were some question marks around the market as a kind of overall basis. what we've seen in the last few years is a really maturing of the liquidity routes. So Hong Kong particularly has taken huge steps to now be a tech-friendly IPO hub. The Chinese A-share market has taken kind of similar steps, and also through the kind of Hong Kong-Shanghai Connect, Hong Kong-Shenzhen Connect, there's a greater ability for foreign investors to access the A-share companies. And then we've certainly seen now maturing in the M&A market, which was something historically we didn't have in China. Just in the last year, we've sold 2 companies on two other businesses. Baidu bought one of our companies, Meituan bought another. And so more and more so we're seeing companies that are being built to fit into a larger mothership, which is a nice way to take money off the table. And then the private secondary market, as we discussed. So the ability for people to sell shares in companies that are still private and take a little bit of money off the table, maybe their cost basis, but still enable them to ride the upside in the market once there's a listing. And certainly in China, I think if we were to compare it with the US, it's clear that companies are much more rapidly going out the door for IPOs. I mean, we've had 6 IPOs already in the last year and a half. Even companies that maybe feel like they're not so ready are pushing out the door, where we have the opposite situation in the US. Large companies like Airbnb, Palantir, Uber have been private for seemingly decades. And so it's a different dynamic. So I'm not sure how long-lived that secondary market will exist, because they're going for an IPO so quickly. I mean, we have companies like Pinduoduo, a company that 2.5 years after founding had a NASDAQ IPO at $25 billion. So.
Is there a risk that the government at some point steps into this story, though? Because it doesn't create a great impression if you IPO and then the price falls very quickly, and then investors feel that they've been sold a pup. And I guess when you're putting so many companies into the market in such a short space of time, and you're being affected by global political stories as well that are driving Chinese equities lower, then there are all sorts of headwinds. Do you worry about the government taking a more robust position and perhaps blocking the pipeline?
Historically, it's been the opposite, right? So when we first started investing, we had a number of our portfolio companies that were stuck in that A-share queue for 3 years. And the big fear was that you could invest in businesses, and even though they were ready for IPO, they couldn't get out the queue. And so we're now seeing the opposite, which is where they're facilitating that. I think that whether the share prices fall after IPO is more a dynamic of the public markets and perception of those individual companies, and we could go company by company. But I think that if that continues to happen, certainly more of the entrepreneurs will want to hold back. So I think it'll be kind of a natural dynamic rather than something that's forced. You have to really look at each company to understand why some of the shares have fallen. Xiaomi, for instance, I think a really great business, but one that's largely misunderstood by particularly investors outside of China. Tencent hit by gaming regulation. So each has kind of, I think, an individual story, not necessarily tied to an overall trend.
Can you share with us how you see the broader journey for private equity and technology? Jim Breyer yesterday appeared to suggest that people need to reset their expectations about returns in this sector now. Is that a short-term phenomena? Or will the bigger money come back? Or have we just reached the end of the growing phase for this business, and then we're in a longer maturity phase? We've done the adolescence, now it's becoming grown-up. I mean, share with us your thoughts on this.
Listen, returns are never going to be sustainable as they have been over the last few years for in the indefinite future, right? I mean, certainly even at a GDP level, we're not going to be able to achieve 6% returns every year. That's not realistic. But I do think that it's pretty early to call time on the types of returns that we're getting in China today, and for a few reasons. One, the capital is there for these companies, so they're going to continue to grow and have plenty of fuel to support them. If anything today, most global asset managers and typical institutional investors are underexposed to China, a lot of them fearing, again, some of the traditional kind of narratives around China, around real estate bubbles or whatever, and fearing that type of an environment. But what we've proven, certainly particularly this year with huge IPOs like Xiaomi, Meituan, is huge amounts of capital now have been returned to those institutional investors. So they'll be re-upping, and they'll be bringing their friends. So there's plenty of capital for the market. I think there are certain sectors in China which have become overheated and certainly hyper-competitive. E-commerce, ride-sharing, some of the usual suspects, certainly fintech. But the result is obviously then that now we'll evolve down the value chain to other sectors. So life sciences, healthcare services, plenty of under-penetration in manufacturing, industrial redesign. So I think there will be plenty of returns to be achieved in other sectors outside of the kind of core mainstream.
And what's the trigger word for generating your excitement in putting some money into a new company today in terms of whether it's in healthcare or whether it's in another industry segment? What gets you really excited? What do you think the hottest sector to be in right now is?
Sure. Well, we're certainly looking for places where we can have a very moated business, something that's irreplicable. So a data set, something of that nature that is so large and aggregated and has so many kind of knock-on monetization opportunities, that's really attractive to us. So one of our portfolio companies is now arguably the world's largest healthcare big data company, and we've aggregated a data set of about 290 million people. So places where we can do that over and over, we're looking at other companies along those exact same lines today in big data, but for other sectors, in SaaS, fintech, things that can be used for fraud detection, for giving pricing loans, things like that, insurance pricing. Those types of areas are really interesting to us. We're also looking for platforms, and that could be, again, in any sector, but something that enables us to start with that core product and tack on services around it. So perhaps it's a trading platform in its core, but then we can tack on logistics services, warehousing, finance. And so, that's the kind of attractive play that we're all looking for.
And just to wrap up with a final question, really, I mean, there may be some people in the room here who are beginning to look for funding for a business idea here. How has the pitch got to change now that we seem to have come past that big initial wave of money? Mm-hmm. It does feel the marketplace is becoming much more discriminating and harder-nosed. What do they need to be able to say to you in that pitch very early on to stop you walking out of the room?
A lot of factors go into that pitch, certainly. I think that, first and foremost, the market has shifted. I think entrepreneurs' expectations have now gotten a little more reasonable. There's a little bit more humility in the room when we talk to entrepreneurs. Certainly, again, you've got to have something very unique about your model. Either it is the business itself in a very unique space that other people aren't looking at. There's something very unique about you as an entrepreneur. You have deep domain expertise in a very difficult sector that other people are afraid of going into or have stumbled in because it's so complicated. We'd like to see the ability to very quickly scale a business. So, the types of platforms that can grow virally, but also where there's a view towards also making a profit. So where your unit economics still make a lot of sense. And we're certainly out of the era where we pay for eyeballs, pay for users. And so you've got to show a very clear path to monetization and a very clear path to becoming profitable to be attractive.
And I said last question, but I'm just going to nick one more if the boss doesn't mind. And it's a question about the attractiveness of you being based in Beijing and a Chinese business, and say Jim or somebody else who's coming from the outside to try and put money in. When you talk to some of these startup entrepreneurs, do they express a preference? And if they do, why?
So if you kind of trace the evolution of Chinese venture, let's say since 2000 or so, which is really where things kind of started, and many of the biggest funds in China today only existed since 2005, 2006. There was a period of time where there wasn't a lot of international or a lot of US dollar funds that were local to China. And so you had a lot of the larger global buyout folks coming into the market and providing that initial capital for some of the core businesses. And that's why a lot of US companies can claim that they were, kind of pre-IPO investors in folks like Alibaba and others. I think those days are starting to wind down. We certainly have plenty of locally based venture capital, private equity, growth capital funds that have raised multiple billion-dollar funds, even some as high as $10, $12 billion. And local entrepreneurs need local support. And so if someone is parachuting in from Hong Kong, has one person sitting in Hong Kong, or sits in Silicon Valley, or, God forbid, sits in New York and has an IC decision that has to kind of govern what's going on in China, they're not going to get their head around the model fast enough, and they're certainly not going to be there to support the company as it goes along. And so we've found in some of our rounds that the global buyout shops were sniffing around our deals but couldn't come to a decision fast enough, and certainly couldn't support businesses. You know, we specifically liked Mobike, for instance, because the core of its investor group were local warriors, funds and and strategics like Tencent that could add a great degree of value to that business. Our competitor at the time had a lot of international money, and the result is now where we've had a really nice multi-billion-dollar exit at Mobike, and I think the other company is just about gone. So it's really critical that you have local support for these businesses.
Well, let's finish on that high. Thank you so much, Ben, for speaking with us.
Thank you very much to Jeff Cudmore and also to Ben from MSA Capital. So before we move on to the next speaker, I would like to just tell you a few things about this afternoon's program so that you can perhaps plan your day. So we're going to have lunch at the end of this morning's session up in the lobby area, but up there's also some really interesting exhibits for you to check out. There are various enterprises that are showcasing what they do here in the Nansha area. There are also some site visits that we've planned for you, if you would like. Between 2 and 4 p.m. this afternoon, you do have to register, so we make sure that we've got enough seats for you to take you there and to show you around. And the couple of site visits that we have are, firstly, the Mingju Bay Development Exhibition Centre. I believe that exhibition centre provides a comprehensive introduction of the Mingju Bay District, mainly from the aspects of its planning outlook, the construction idea of green ecology, low carbon and energy-saving intelligent city. So that should be very interesting. And then there's another site visit. This one is for the Cloud Walk Technology Company. And that's a high-tech enterprise specializing in computer vision and artificial intelligence. It's actually the largest supplier of artificial intelligence for the Chinese banking industry. So if you're interested in anything to do with fintech, that is a must-do site visit for you. So those are a couple of things for this afternoon. Please do register up in the lobby to make sure that we have a spot for you. So shall we move on now to the next speaker? So if I say the name Imran Khan, what does that conjure up for you? If there are any cricket fans in the room, it probably conjures up the idea of the very famous Pakistani cricketer. We're not talking about him. And if you're a Bollywood fan, you might be thinking, oh yes, Imran Khan, the Bollywood star. We're not talking about him either. We're talking about a different kind of star. Yes, the guy who swapped Wall Street for Snap, the parent company of Snapchat, and now he's swapping Snap for blank. I'm going to leave you, Dee, to find out. Let's give a big round of applause for Imran Khan, who is formerly the Chief Strategy Officer of Snap, and Deirdre, our host. Clap.
Thank you.
Thank you, Mandy. So not a Bollywood star, not a cricket star. That's okay. We're very pleased we have you.
It's very easy to get restaurant reservations. Imran Khan wants to come for dinner tonight. Primarily if you're in London. I try to act like my own assistant. Hello.
There you go.
I'm calling on behalf of Mr. Khan.
It's a great name to have then. But let's talk about Imran Khan, the man we have right in front of us. Thank you, by the way, for coming all the way from LA. One of our furthest guests to travel here. Let's jump right into, since I know you love to talk about Snap, we'll save that one. We'll talk about your business first, this new business. You're going into e-commerce. My question for you is, what can you do that Amazon cannot? Amazon is one of the most feared companies in the world, particularly where I sit and where you sit in California, especially in Silicon Valley. They don't care about profits necessarily. They have billions and billions to invest. And you were at Snap. You know what it's like to have a giant tech company copy what you're doing. So what can you do that Amazon can't?
Yeah, look, I think, big is not always better. I think if you look at the history of innovation, if big was always better, new companies would never come up. And I think if you look at in technology, the innovation is happening at such a rapid pace, and the market's still so nascent. right? I was looking at the data yesterday. Only 10% of all retail sales in the US in Q3 is e-commerce. Only 10%. And so when you have that as such a large population and large market, not one or two players can serve everybody perfectly. Right. So there's a lot of room for innovate and
what is your innovation? What are you going to do?
That's you need to stay tuned.
We have to stay tuned to that. Okay, but you will offer something that Amazon is not. Is that right?
Of course.
And you kind of said on the way out here, you are scared of Amazon, though. You're going to be watching them. You watch what they do, and you need to protect your business.
I think you should always be very fearful of your competition, but you shouldn't let fear drive it. I think the big thing that what I learned over the last 20 years focusing on technology, I think it's all about, first you really have to identify who your customer is. And I think there's so many companies always forget who their customers are. And once you identify your customers are, you have to be maniacally focused on serving that customers the best.
Well, now you sound like Jeff Bezos. That's what he says, customer first. So you're probably off to a good start now. You were no stranger to e-commerce. You worked on Alibaba's IPO. What lessons did you learn from Jack Ma?
I think probably the most amazing lesson I learned from Jack and my time working with Alibaba Group. IPO is not the only thing. I advised them buying back share from Yahoo. When we were at Credit Suisse, we actually invested $50 million during the convertible process. I think one thing that I really admire about how great culture he built. I think the culture is the immune system of a company. Because when you build a company, you're going to have a good time and you have a bad time. Because if you need to have a strong immune system to survive through it. And the culture is the immune system. And he built an incredible immune system, the team he put together, the culture he created, and the partnership culture. That's really, really remarkable. And I think as I think about building the new business and trying to recruit people, I think culture is probably one of the most important things we want to do. Because if you put together the right culture and right innovation and a great team, people can do impossible.
Right. Now, Jack Ma was in the news for another reason this week, made some headlines while the East Tech West conference was going on. The People's Daily said he was a Communist Party member. Some people were surprised by that. Were you surprised by that? Do you need to be close to the Chinese government, a member of the Communist Party, to operate, to grow to the scale that Alibaba has?
Look, I think different countries have different political systems, and their citizens have different political belief. Right, and when I meet a CEO of NBC like Steve Burke, I don't ask him, hey, what's your political affiliation? So I don't know if it's that relevant from a business perspective, what's people's personal political belief is, or who they vote or who they don't vote.
Right, so not something that you and Jack ever spoke about.
I did not talk to him about his political belief.
Let's talk about China and your business. We spoke to some people yesterday. One VC said that startups now have to look at China immediately from the get-go because of the scale, and we've heard a lot about the enormous opportunity here this week. Are you looking at China now?
I think for e-commerce, it's such a operational heavy business, right? It's a lot of operational work you need to do. And so I think at the beginning, we're going to focus on the US, which is the core market for us at the beginning.
Okay. Let's get to the elephant in the room, Snap. You helped it go public at $17. It's now trading at $6 and change. I know that you helped grow revenue and do a lot of things there. Clearly, there's still a lot to do, and markets don't think it was enough. So why leave when you did, which was just a few weeks ago?
Yeah, I think, first of all, I never believe in timing things, right? Because if you're always trying to timing things, you always miss the bigger picture. I think what we achieved in the last 4 years as a Snap in the business, I'm incredibly proud of, right? When we joined, the company had pre-revenue. When we left, they had $1.2 billion run rate revenue. When we joined, there were like a little over 100 or so people. Now we have 3,000 people. The company was on a QuickBook. Now we're a public company. So as a business, over the last 4 years, we have incredibly achieved a lot of things. Look, stock price is a sentiment barometers at that point, what investors are thinking about your company, what they're thinking about the overall landscape, what they're thinking about our macroeconomy. You just cannot really make decisions based on stock price. As I said yesterday in our conversation, that Evan and team are focused on building building the business. I think it's all about innovation. So if they can continue to innovate, they will do fine.
Then what are you seeing that the market is not seeing? Why doesn't the market seem to believe in that innovation and all the things that you put in place? What are they missing about Snap?
I think, the Snap has to execute in terms of some of the newer product innovation. I think this year, obviously with the redesign and some of the things, there were some hiccups, and I think they need to show that they can continue to innovate the way they did in the past.
Right. Now, there's been some reports that Evan looks at the long term. Do you think that that's the right way to look at your company, if you're a public company CEO, not worry about the markets and the day-to-day and look at the long term?
Look, I cannot really comment on what Evan does or doesn't do. I think you need to ask him. But I think, if you look
Well, you worked with him on strategy, though. So,
yes.
So you guys would work together on this. So would you talk about the long term? How much would you talk about the short term and what you needed to share and show investors?
Yeah, look, I think it's really have to appreciate what I did during the work that's probably not the right thing to talk about because of a variety of reasons. But I think if you take a step back and look at the people who build big businesses, they always really have to believe in long term. And if you don't execute, primarily in the technology space, if the world has changed so fast, if you don't take a long-term view and just really manage business for day to day and quarter to quarter, you will miss out a lot of different things. So I think, my interactions with a lot of great entrepreneurs, they always really focus on long term. So I think that's a good thing to do. But also at the same time, obviously you have to recognize that long term consists of series of short terms. So, but losing focus on long term and who are your customers is never a right thing to do. So I think all great entrepreneurs should focus on long term.
Right, and I know that Evan and you working with him, big picture, you have this vision for Snap to be essential, right? Especially based on the camera. Is there a business plan to get there? Why is execution taking so long?
I think, I probably would beg the question with that, because I think, there's a very few companies, in China, obviously, that happens all the time, apparently, but outside China, there's very few companies goes from 0 to $1.2 billion run rate revenue in 45 months. So that's, to me, it's a pretty good execution, but
You're happy with that?
I'm very proud of it, what we achieved.
Okay. What have you learned from your time at Snap, then? What lessons are you going to take when you start your own business?
Look, I think few things. I think one, really continue to build great team, surround yourself with the really, really smart people, create a great culture that is transparent and be very deliberate what decisions you make.
Okay. Let's talk a little bit about what was going on at Snap when you were there, Chief Strategy Officer, and all of a sudden, Instagram starts doing some very similar things that Snap was doing. What was that like? How did your strategy change or not change? Did you start to pay more attention to Instagram, or were you paying attention all along?
I think, again, the right way to run a business is really focus on how you continue to innovate your product. And the moment you cannot innovate, you will not going to succeed. I think if you look at in the mobile what's happening, then people are continue to spending more and more time on mobile devices. And the time spent on mobile devices will continue to grow. And as the time spent mobile continues to grow, everybody is trying to fight for how can you capture more share. And the only way you're going to get it is through innovation and can you building the best product and best engagement.
Right, and Snap's product is still more innovative. Would you say that to Instagram? Is Instagram now creating its own, or is it still copying?
I think they're very different product in many different ways. There are obviously a lot of similarities, but then there's a lot of different differentiation. So there's a couple of differences, right? So when at Snap, you open to a camera. So you actually record your experience. In Instagram, you go there and you actually open to someone else's experience. Very different experience. While they have a lot of similarities, they also have a lot of differences like that. For example, Snap has product like Maps. Instagram doesn't. So I think, while we focus a lot on the different similarities, there's a lot of different things that the different product has. And then again, I think long-term, who's going to win will ultimately depends on who will going to continue to innovate.
Is it a zero-sum game then, if you say? Depends on who's going to win?
Or can
both win?
I think if you look at markets like China, there are multiple players that are existing. Again, if time spent continue to, perfect example is if you look at the network television, right? Okay. There are ABC, CBS, NBC, Fox, they all create different kind of shows, but you have 4 different networks who are doing really, really well.
Right. Let's talk a little bit, I would love to get your view on the very bad year for Facebook. How do you see Where have they misstepped, have they? And what do you think needs to happen now? Not just what Facebook needs to do, but perhaps in terms of regulation.
So two different questions. I think tech companies, as they're becoming really, really big, there will be, obviously they're impacting a lot of people's lives, there's impacting a lot of different businesses, and when that happens, there has to be some sort of regulations. But I think one of the things that's really, really important about that, it has to be smart regulations, right? I think I'm not opposed to having regulations, but what we really need to be very, very mindful that the regulations we're doing are their smart regulations. Because I think, look, take an example of the banking industry, right? In 2008, financial crisis happened. All these different regulations came along, because I think probably one of the goals was makes the banks safer. Let's make sure that they're not too big to fail. 10 years later, the U.S. biggest banks are still the biggest bank, and they're bigger than ever. So I don't think those. So now really you have to take a step back and say, were those regulations really smart? What happened to all these smaller businesses? What banks? What happened to all these community banks? So again, I think one of the reasons that technology companies are really, really being very successful is that there's a lot of young entrepreneurs who are able to come and build great businesses. And suddenly, if you want to bring regulations, that's fine, but that regulations have to be smart so that it doesn't stifle, innovation. And I think that's really, really important.
In the case of Facebook, have they mishandled their users' data?
Look, I think I don't have all the details to really talk about what they or they didn't, but... But based
and there's a lot of evidence that has come out.
Based on what I read on a newspaper, that's clearly very disappointing. I think in terms of, like, for example, users, opposition research for people who criticize you, that sounds a little bit silly things to do. For if you're in a corporate leader, that somebody criticizes you and you have to have an opposition leader. And it probably begs the question that if you are so conscious about those kind of things, what other things you have potentially, have done. So the code of conduct that, that I think obviously is something they need to look into it, that whether there is a right standard of code of conduct in the business.
So you're saying essentially there could be more skeletons in the closet?
I have no idea. I think, if I were running that business and issues like that, I would probably look into if there's other area that code of conduct, that's something I can be proud of.
Okay. When the article came out about opposition research, did anything sort of go off in your mind? That made sense. Do you think that that was ever directed towards Snap?
I don't know. So I'd rather not speculate.
Okay, fair enough.
Hopefully they didn't do opposition research on me. Just kidding.
If you see a piece now. Okay, well, we have just about a minute left, and I would also love to open it up for questions. Are you okay with that, Imran?
Sure.
Anyone like to ask Imran a question? Favorite Snapchat filter? Better not ask about favorite Instagram filter.
I don't even know.
You do have Instagram on your phone. You were showing me, so...
Yeah. I obviously use...
In different... Yes, exactly.
But
different needs.
Yeah, but I don't use it.
What do you use Instagram for? What do you use Snap for?
I use Snap for communications. I use Snap for expressing my day-to-day life. And Instagram I use to look at some influencers or celebrities,
Can't you do that on Snap too?
You can, but Instagram captured their best moment, right? It's just you take one picture. If you take 80 pictures, you take the one pictures and put the one pictures. It is best of yourself, and Snap is more of a...
But isn't that what Snap is supposed to do too? You think about someone like Kylie Jenner.
Snap is more of a visual communications, right? So the company started that with the core thesis that people are communicating more and more with pictures, and that's how the familial communication came, that you take pictures and you communicate with pictures. And whereas Instagram is you are basically putting your best scene. And then it's great. Like, look, again, in my opinion, they serve, two different objective, and it does fine. And
by the way, I should note Imran's phone, I think the first few rows are all social media. So clearly there is room for, to have all of them in multiple platforms. And obviously you're on WeChat, right?
Yes.
So last question, what is your favorite Instagram filter then?
I don't know. I've never used Instagram filters.
You don't use filters?
I don't use Instagram filters.
Okay, well, after this, we'll take a picture with Instagram filters, and I'll say that this is
I think Snapchat camera is better. I like that one better.
Okay, thank you very much, Imran, for joining us.
Wonderful, thank you. Thank you very much. The hero of teenagers all the way around the world. My son is a big Snapchat user indeed. So Imran Khan there, the famous tech entrepreneur, clearly, and not the Prime Minister of Pakistan. Let's move on, because we've been talking a lot about smart cities, haven't we, over the course of these 3 days. So there are so many facets of smart cities to explore. Let's explore it in a different way right now, because it's a huge focus for tech companies, and it's certainly a huge focus for one big tech company named Cisco. So Guy Dietrich is the Vice President and Global Innovation Officer, who is leading their Country Digital Acceleration Program. It's quite a mouthful, but if you break it all down, it actually makes a whole lot of sense, because Guy's been working closely with government and industry, public and private sectors in a lot of countries, right? You know, in Asia, Middle East, Europe, you name it, he's been working there to try and digitize all of these sectors, bring them together to create millions of next generation jobs, and ultimately to boost GDP and provide a better life for all of us. So on that note, Akiko, I'm going to hand it over to you to talk with Guy Dietrich from Cisco.
Thanks for the introduction, Mandy. Guy, it's great to have you here today. I do want to get to the CDA program, obviously, which is what you're tasked with, but I have to start with the big overhang and the discussion that has been happening a lot here at the conference, which is the question about where U.S.-China trade relations are headed, because your CEO and chairman, Chuck Robbins, has been quite vocal about the price pressures that this has created on the business. As you look to where the White House is headed, uncertainty around the policy and the price pressures that continue to build up as a result of the tariffs, how's that forced a rethink within the company in terms of the strategy?
Well, Cisco, being a very dynamic global company, is very surgical, very focused on whatever cost increases we have to pass along to our customers. But simultaneously, we optimize our supply chain. For instance, we're constantly reconciling with the volatility of memory prices. And so we have not seen a dramatic fall off at all. In fact, we've seen quite good growth in our enterprise business. So we're not seeing any real impact right now, and continue to watch, but no major change or fluctuation in strategy.
As you look to the CDA program, which we'll get into, is there a concern that maybe a lot of countries, as they see the global macro environment maybe cooling down a bit, will hold back on some investments as it relates to technology?
We're actually seeing the opposite. What we're seeing is that they are seizing this opportunity to leapfrog and to accelerate, which is what this program is all about. They see it as an opportunity where maybe others may be a little less aggressive. Our customers, our countries are being very aggressive in their growth opportunities for digitization in the digital age.
So let's talk about the program.
Yeah.
We're about 3 years in now.
That's right.
Country Digital Acceleration, CDA for short. This was a very ambitious project, which you were brought in, tasked with immediately to digitize not just countries like China, but those like Azerbaijan, as you point out.
Yes.
Where are you in the process? You know where you started, you know where your ambitions were. Are you moving along a lot quicker than you expected? Give me a sense of where you think your success marker is right now.
To be honest, yes. We never would have imagined that so many countries would have stepped up to this challenge. What CDA is, or Country Digital Acceleration, is more than anything is a process. And it allows us to go into these countries. We started to see many of them coming out with their country digital agendas, right? Typically, they'll work with a McKinsey or a Deloitte or one of the large consultancies to develop this digital agenda. Many of them are very ambitious, very targeted to the particular needs of that country, but they had no execution plan. And so that's what our process does. We come in with a process that allows you to build an architecture for the entire country against 4 key pillars: research and education, business and innovation, digital platforms for economic development, and infrastructure. We then, with the agreement of the government and with our partners, will build an execution plan down to the task level, including budgets. And then when the government signs off on it, on what they believe to be the key things that are really going to move the needle for that country in the short term, we start executing. And they know exactly how much it's going to cost. We have all of the partners built in. Sure, we bring Cisco products and services to bear, but we also bring in the local partners, the local companies that can help us. And then we go to our larger global network of 60,000 partners around the world that Cisco works with directly to fill in the remaining gaps.
You've worked with dozens of countries so far.
Yes.
As you decide what your next market is there a checklist? What is that selection process like?
First criteria is a very strong, engaged, visionary leader. And I mean the president or prime minister. Without that visionary leader, we really can't move as quickly as we need to. We then look to the next tier of government leadership to make sure that we have the right track partners. So it could be education, transportation, healthcare, IoT, cybersecurity, whatever those key areas are, we have to have the right functional partners at the government level. And then we look to the actual industry infrastructure, what vendors and other partners we can bring to the table. If it passes all of those criteria, then we know we have a country we can really accelerate with.
There's a lot of people who will listen to this and say, this sounds like a great vision, but Cisco's not just doing this out of the goodness of their heart. You've got to have a business case for it. So what is that case?
Well, so we have a tremendous amount of money that we do invest in these countries. But the way that we invest is we invest in proofs of concept. So let's say, for instance, in India. India right now, we are starting our 3rd year in India. We have 55 active or completed digitization projects that we funded around the country. And one of them was what's called a Smart Mile. It was 1 mile in a very busy city center that loaded up with all things smart city, all things IoT, just about everything we, our partners, could bring to the table. And then we tested it as a proof of concept. We found out what was relevant, what wasn't, what actually provided a return on investment. And then we optimized that solution and then started replicating it around the country. President Modi, or Prime Minister Modi rather, is prepared to undertake 100 smart cities, and we're on number 17 now. So it really is around making sure that the country gets off on the right foot. It's a business proposition for Cisco and for IT as a whole, but it's really about making sure that the right decisions are made up front so that money isn't being thrown down a black hole. Technology is only the enabler, right? We want to make sure that the focus is on the outcomes: GDP growth, jobs creation, and building up a sustainable innovation ecosystem.
And of course, for Cisco, when you talk about really making sure that a country is digitized, you want to be right there so that when they do make that transformation, they do have that partnership with Cisco in place for that business opportunity. Is there a number that that the company can point to say, this is how much growth we see for the company in initiating the CDA program?
It's not directly linked to the CDA program. That's what's important. This is very much a long-term growth strategy for Cisco, but also for our industry and for that country. So there isn't a particular dollar figure tied to it now.
You point to India. This is a really interesting example for me because I've certainly seen the transformation there, being on the ground on a few trips. And Narendra Modi, as you point out, has been a huge advocate about this digital nation. And yet what you have seen is a lot of fragmentation. You talk about access to internet, and yet women oftentimes are being marginalized in that way. Yes. Each home may now have a smartphone, but women don't necessarily have access to it. There are cultural pushbacks. How do you deal with something like that?
Well, Like many in this room, we acknowledge that technology is agnostic. Technology is an enabler. It doesn't know borders. What we do as a company is establish the greatest opportunity for success and potentially for change and evolution. I'll give you a quick example of a little town called Palghar, about 2.5 hours outside of Mumbai. It is your typical, very poor, dirt road village in India. And I was just there, and we connected them to the internet for the very first time. They've never had access. And I watched as a group of little girls got out of school. And some of you have seen this, where they're dressed impeccably, right? Beautiful uniforms, flowers in their hair, hair pulled back, and no shoes, and walking down the dirt road. And what you realize is that in connecting this village, like so many other villages or so many other parts of the world, these young ladies are now going to have the opportunity to be doctors and lawyers and engineers and scientists and journalists and things that they never would have had the opportunity to do before. So it is incremental change, but it's change, and it's change for the better.
That leads me to the question of inclusion, because what we often see are tech companies offer these grand solutions, and yet there are only certain parts of the society that can afford to tap into that solution. Mm-hmm. How do you address that issue? Because you bring up this example of a village in India. How do you make sure that the technology and the solutions you're providing is accessible to all parts of the country?
Well, see, that's the thing about the digital age, and what's fundamentally different. So, as you all know, Cisco, connected the world in the information age. Still, 70% of the world's traffic crosses through Cisco equipment. Yet we were limited in our ability to deliver for the world, for all the reasons you just said, economic circumstances, cultural circumstances, etc. In the digital age, there are no more excuses. Everyone should be connected. At this point, it should be a human right to be able to be connected and included in the rest of the world. And we can do that this time. We're going to go from 20 billion connected things today to 500 billion connected things and people by 2030. Maybe you've seen I think we've all seen that satellite picture that goes around the world at night, and it shows Europe lit up, it shows China lit up, it shows the United States lit up, and you get to Africa, and it's a giant dark spot with just the tiniest little glimpse of light down in South Africa. We have no excuse for that to be the case in 10 years anymore. We should light up Africa. We should light up the rest of the world. And we have the capability to do it. With healthcare, there's no reason why a person in far southern reaches of a country, the most rural region of a country, couldn't have access to oncologists at MD Anderson Cancer Center in Houston through technology. It's all there.
Let me ask you about another question that has popped up a lot in the tech sector, which is the question of responsibility, where the responsibility lies for these tech companies in the changes that they are creating globally.
Yes.
In the case of Cisco, as we digitize these countries, naturally that leads to more automation. There will be more people, the thinking goes, that will be replaced with machines. And so what is the responsibility for a tech company like Cisco to make sure that those who are displaced in those jobs have the skills that are necessary? Is that contingent on you to make sure, or Cisco to make sure that you do retrain these workers so the jobs, when they become available, they are ready for that?
See, that is one of the key tenets of the Country Digital Acceleration Program. We don't just do tech. We also do training and education. So, for instance, right here in China, we signed an agreement with the Ministry of Education to train 400,000 students in 3 years. And happy to say we've just trained our 286,000, and we're just a year and a half into the program, just under 2 years into the program. So we'll reach that goal. You have to do that, because when you digitize, you do create an obsolescence for certain jobs. It is just a part of the process. Certain jobs aren't going to be necessary anymore, or certain jobs are going to be done by mechanical or other or robotic means. AI is going to change the landscape completely. 5G is going to change the landscape. What's happening, though, is that those jobs, it's not that they disappear. It's a churn, an economic churn, where the old jobs are swept away, but the new jobs emerge. If you had told me back when I used to have a software company many years ago, if you told me back in the early 90s that the job that I really need to get is in cybersecurity, I would have said, what is that? Because it didn't exist. So many of the jobs that our kids will be doing don't exist today, and it's because of the transformation that's taking place. So yes, there will be some jobs that go away out of necessity, and they should, but they're replaced with much better jobs, long-term jobs, better paying jobs, jobs more associated with an innovation economy rather than an agrarian economy, for instance. And it is incumbent upon governments and industry to work together to retrain those people, because the government isn't going to be able to predict the future. Industry is a little bit better at it because we're in the middle of it, and we do have people that think about 5 and 10 years out. Combined, we can create those next generation jobs and have them well trained leading up to it.
I know we're out of time here, but we didn't get into any audience questions, so I wonder if there's anybody that would like to ask a question before we go.
Thank you. I'm Laurent Malespine. I come from a company called Don't Blink in Thailand. My question is about Southeast Asia. With the tensions, a lot of people are paying a lot of attention to maybe diversifying their investment in Southeast Asia to get around the problems between the US and China. What do you think of the readiness of the key Southeast Asian countries, key members of ASEAN, including Thailand, compared to the rest of the world? And I mean, the word smart city is used a lot there. There are big projects on the eastern seaboard of Thailand. Mm-hmm. What do you think of the state they are at and the chances for them to move ahead as quickly as some hope?
I think it's very good. I was just with a great leader, President Jokowi of Indonesia, and we signed them up to be a CDA country. And they have an incredibly aggressive digitization plan. And they're just one example. I think that this area, this region is primed for it because it's very entrepreneurial. They have a highly educated population, and the GDP growth in this region is just off the charts. So I think in combination, it's a very, very good opportunity for other parts of this region to flourish.
Okay, we'll have to leave it there. Guy, it's great to have you. Thank you so much.
Thank you. Thank you.
Thank you very much to Guy. I think you should change your name, though. Instead of Country Digital Acceleration Program Lead, which is kind of a mouthful, maybe just call yourself Big Vision Guy. Okay. Right? You know, the vision where the divide between tech haves and have-nots doesn't exist anymore. I think that's a wonderful and noble vision.
Duly noted. Can we borrow that?
Use it.
Okay.
Use it. Just give me the royalties. We're golden. Thanks very much, Akiko and Guy Dietrich from Cisco. Thank you. Well, let's move along now and move into the world of fintech once again. So Phoenix Finance is a financial investment platform that provides financial services for Chinese people around the world. It sounds like a very simple idea. I'm sure it's not quite as simple as that sentence. Let's have a chat and get below the hood, find out all the details now with Vince Zhang, who is the president of Phoenix Finance, along with Louise Lucas. Welcome to the stage from the Financial Times. Let's give them a warm welcome.
Thank you.
Thank you. So let's kick off this morning, Vince. Media company going into fintech, how does that work?
The rationale behind this move is because, Phoenix TV Group, as a mini media group, has been in operation for 20 years and then accumulated a lot of, over 400 million high quality, very loyal users worldwide. And then the thinking is, what more can we offer to them? And then, financial service and media are very close linked because they're all both intangible. So I think that's why we decided, okay, whether we can use technology to help our audiences to better manage their wealth.
Right. Now, fintech's obviously a huge and very, very fast-growing industry, and there's broad church as well, from payments, loans, insurance. In China, why has this taken off so much in China? Why do you come here and everyone uses Alipay, and you go to the US and not many people are using Apple Pay? What's the difference? Why has this taken off so much here?
I think it's because the main reason is because the infrastructure in China is compared, for example, to US is relatively behind. For example, credit card. There are a lot of people, I think, hundreds of millions of people in China don't have credit cards. They don't even have credit scores. That's why you have a payment system. Then you also have, online loans offered to them. I think that's one area. And then another area actually is related to wealth management. There are a lot of people in China who has a lot of money. They need to think about their retirement. They need to think about their children's education. They need to think about their own parents. But they don't. They're not the ideal customer for traditional private banks or for traditional wealth management companies. It also creates a huge area, and that's where Phoenix Finance is in.
Right, and how about the regulations now? Because what happens in China so much, we see industries totally taking off, then the regulators coming in, and we've seen quite a lot in the fintech space in terms of wealth management, loans, P2P. What's your take on where the regulators are now in terms of looking at the industry?
I think there are several factors affecting their thinking and their actions, because on the macro level, China's economy is a little bit slowing down, and then the government is trying to deleveraging. And then that also includes the shadow banking system and the private sectors. And then there are a lot of activities related to fintech actually tied to private sectors and tied to consumer behaviors, consumer loans, for example. So I think that on the macro level, the government is deleveraging and want the outside, for example, the activity outside the traditional channels are more regulated, becoming more, I would say, controlled, and it's understandable. And on the other level, I would say is since the fintech evolution, starting from more or less in 2010 in China, it has been on a very fast growing track. And there are a lot of startups entering this space, and they're actually based on different analysis, there are numbers, some number like 10,000 companies in this area. So that obviously creates a lot of, I would say, create a lot of companies are not, in terms of their business plan, in terms of their risk management process, in terms of their overall management, in terms of their, a lot of this corporate control mechanism not in place. So, but for other areas, I would say it's okay. But for anything related to financial services, it's pretty dangerous. Without proper risk control mechanism, personnel, without proper ways of communicating with regulations, and potentially becoming a very big risk going forward. So I think in just by itself also needs, I would say, it's time for a correction. It's time for people to really look at what we are doing and then say, how do we move forward? I think these two factors combine together, and then we see in 2018, and I would predict in 2019 or going forward, it's becoming more regulated. There will be less and less players in this field, and it's consumer protection, risk control, compliance, all these issues need to be put into a much more important agenda.
Right, and how much is technology helping with that? Because obviously a lot of the idea was, we've got the big data, we're much better at sort of analyzing credit risk. Is that just not happening, or is it that other things are going wrong? Funds are being redirected or whatever? I mean, where actually is the tension point?
I think the technology itself is, there's nothing wrong with it. It's very powerful. For example, if you look at credit risk, technology can help you to really gather a lot of data that is not humanly possible. For example, in China, a lot of companies looking at thousands tags on typical user. You're looking at their online activities, you're looking at their phone activities, you're looking at their social connections, you're looking at their online purchasing patterns. You can look at a lot of things, and then I think these are valuable. There's definitely a value, but relying on technology alone is not enough, because especially in China, there are groups that are studying what your technology is doing, and then they're using measures to counterattack your measure. They create fake phone numbers, they create fake online activities to counterattack. So you have to combine technology with a lot of human intervention, and then what we see in China is happening. There are a lot of, used to be 100% machine decision, now it's more like 80-20 or 70-30%, yeah.
Oh, that's really interesting. So I guess that's always the ways that technology moves that fast, but you can game the system by moving that bit faster, and it's a constant.
Yeah, and in China,
it's
industry. It's actually an industry. There are a lot of people are making money out of this, out of this industry. Yeah,
that's classic. In terms of the systemic risk as the economy slows, I mean, one thing, as we'll see, as we've seen in other industries, like sort of e-commerce kind of things, we will see sort of, like you're saying, some of the players come out. Will that then create a much stronger system, do you think, a more robust one? And if we do just have fewer players, will they then be using one credit's risk scheme, or will we still be seeing different risks, credit assessments?
On the lending side, yeah, actually the government is, they're building a company that actually supplementing the central bank's credit system that basically connect to a lot of this, you would say, borderline financial institutions to collect data from them and then putting into a pool and then provide them the data back to them. I would think going forward, there will be a lot more official data that can be used, and also it's in one place.
Right, but we would still have the Sesame credit, the 10-cent credit, or do you think ultimately the government one will be the one that people will look to?
This I don't know, and I don't know the answer to that.
Right, fair enough. So tell us a bit more about wealth management. Yeah. Why this is obviously we're seeing more billionaires every day being crowned in China. Mm-hmm. What are the advantages of using technology in wealth management?
Yeah, I think this is a very interesting topic, because if you look at there are several factors, because although the China economy is slowing down, but the personal wealth in China is growing, and actually by different companies' estimation, they all came to the same conclusion: is by 2020, China will have the largest personal wealth in the world. It's surpassing the U.S., so it will be more than $30 trillion US dollars. So overall market is growing. The second thing about China market is where Phoenix Finance is in, we're looking at the second tier of the investors. Basically, the first tier investors is people having over $1 million to invest. So that's a customer for traditional private banks or traditional wealth management firms. But the people with, say, $50,000 all the way to $1.5 million, this group of people are largely ignored by all channels before, up to this point, because there are 150 million of them, and then the complexity and the complexity and the work involved to serve them is essentially the same. What I mean by that is you have 2 million RMB or you have 20 million RMB. Both of these targets, they all have very complex needs. You need to understand their profile very well. You need to do asset allocation for them, and then you need to help them to do the transaction, to manage. So it's very complicated. So up to this point, traditional banks are not focusing on this group in terms of their wealth management needs. And then using technology, I would think the key advantage is, we can, once you have the data warehouse, once you have your model, once you have your APP, once you have your transaction system, the marginal cost to serve 10,000 versus to serve 10 million customers, that's what the amount of customer we have right now is very marginal. And then the more you serve, the more profitable you are, versus the more you serve, the less profitable you are.
But if it's such a great business model, presumably everyone's going to pile into it. At what stage does it become very competitive and your margins go down? I mean, is it something that not anyone, but a lot of people could replicate?
I would say wealth management is, the entry barrier for wealth management is somewhat higher than consumer lending, because when you lend people, when you lend money to people, they don't really care about your brand. They don't care about your history, because they're getting money as long as they can pay back, that they're fine with that. But for wealth management, it's a little bit different. That people look at your brand. People look at, especially with the background we just talked about, people don't just look at your interest rate. Even in China now, people look at your brand, looking at how compliant you are, looking at your management team, and so on and so forth. So I would say the entry barrier for wealth management is definitely higher than the lending side.
Right, so what are the problems then going forward? I mean, it sounds like a great business model. You've got your data warehouse. The more you get, the more profitable you get, the more money comes in. Where are the bottlenecks? Is it because you don't need people, presumably, so it's not like some Swiss private bank, you've got to find more people. What are the bottlenecks? What are the things that you worry about?
We still need some people. We need data scientists. We also need, for example, we also have an online-offline model. So for more complex product, for example, a PE investment, we can provide face-to-face consultation to our investment. But no, I agree with you. That's not the bottleneck. I think the bottleneck moving forward, a lot of the wealth management company in China are facing is the client mentality, because more or less the investors in China, they are still they're not really looking for wealth management at this point. What I mean by that, they are looking at absolute return. They are looking at a short-term return. They're not looking at a portfolio approach. They are not trusting people to really manage their money. So they're looking at products. They want to select. They want to look at the details of product. They want to look at their portfolio on a daily basis. So this really doesn't. This is not wealth management.
Right. This is more day trader sort of mentality.
This is active investment. But it's changing. I would say people are changing the way they're looking at wealth management, because a lot of them are suffering because they selected product based on interest rate, based on short-term speculations. They say, okay, this doesn't work anymore. So I would say going forward, the wealth management industry is really going through a very, very fast changing period that people will need a very trusted advisor to give them a portfolio that is not biased, that has the best product that suits their needs, and is worldwide. It's not only within China, but it's within China and outside China. So I think all those, it will take some time, but we are confident that we are going toward the real wealth management market in the next few years.
Right, but you will, along the way, face a lot more regulatory pressure. I mean, as soon as you're doing more outside China, you're going to bring SAFE and all the other regulators in to look at you, I guess. So,
yeah.
So it will change it. But, I mean, that must be a big part of what you do, is sort of making sure what's allowed and how things are changing, particularly in a fast changing regulatory environment, right?
Exactly. The China government, you talk about peer-to-peer, but I think a lot of audiences know that the China government actually is changing a lot of regulation related to wealth management. Online, they're also changing, the asset management industry's regulation. A lot of details. They are actually tightening their control on, traditional wealth management companies. They're looking at the license. They're looking at the fund, what you can invest, what you cannot invest. They're looking at compliance issues. So I would think going forward, there's no escaping from regulations. You have to embrace it. You have to build a really robust risk control system. You have to have the culture. You cannot say, okay, I set up a wealth management company. I get money and I want to invest in whatever I feel, I can speculate will grow, will double in the next few years. It doesn't work anymore.
Right. So obviously it's a huge market. All that, I think 30 trillion you said? That's
overall 30 trillion, and then our customer segment from $50,000 all the way to $1.5, that's our 150 million people. This segment is going faster than the higher segment or the lower segment. There are also 500 million people in China. It's not ideal customer for wealth management. It's good customer for lending, but they only have about 50,000 RMB. But so that's not our customer. But our customer segment is still a lot of people. It's still a lot of wealth to be managed, and it's growing very fast.
So a huge market, but a lot of regulatory pressures and slowing economy. So some challenges along the way as well, right?
Yes, I would say there are a lot of challenges.
Still. Okay, well, listen, thank you very much. It's been really interesting, and to see how we're going to be replacing all the silver-haired Swiss bankers with big machines, but very interesting. So thank you very much.
Thank you.
Thank you very much to Louise and Vince Zhang. Thank you, Vince, from Phoenix Finance. You have to have challenges, because without challenges, you don't push yourself forward, right?
Exactly.
You have to keep on breaking down the barriers and pushing through the obstacles. Thank you very much.
Thank you.
So you might remember on the very first day of East Tech West, we showed a video, and Christine Lagarde of the IMF was speaking. She was talking about the nasty things happening in the dark. She was referring to the need for cybersecurity, or at least I hope she was talking about the need for cybersecurity. And cybersecurity is big business with a capital B, which is good news for the likes of Haiyan Song, who is joining us today from Splunk. Haiyan is the Senior Vice President and General Manager of Security Markets for Splunk, and I guess the really good thing about cybersecurity is that you will never be out of a job, right? There's always someone out there trying to hack and attack and infiltrate. So I'm going to hand it over to you, Arjun, with Haiyan, who is one of the most influential thought leaders in the area of cybersecurity, based over in San Francisco, where it's all happening. Over to you.
Thank you so much, Mandy. Look, let me just set the context real quick, because what we've seen in the past 2 years are some huge cyber attacks on very high-profile businesses, people's personal information at risk, and that's a big problem, and cybersecurity is certainly top of mind for many businesses right now. And in particular, the way that cybersecurity companies are trying to fight back against many of these attackers is changing. It's becoming more automated, and machine intelligence and AI is becoming a huge part of that. So, Haiyan, I want to pick your brains a little bit about some of these new technologies in the cybersecurity industry. Every cybersecurity company I talk to nowadays wants to talk about continuous threat monitoring. Talk us through what that means and how it differs from the approach that has been taken in the past.
Well, the phrase itself is very self-explanatory, but if you double-click on that and say why people are using this phrase and what does it entail, there's a couple of things I would say. We live in a world that's digitized, connected, always on, and the word continuous is important because there's never a place or time you can say, I will take a break and nobody's going to come and try to do something. But the most important part, I would say, when you think about continuous threat monitoring, is also an indication that how fast the type of threats evolves, because you just got hold of one type of things, before you know it, it has morphed. I think in Chinese, I'll use sort of a Chinese phrase as 道高一尺，魔高一丈. in English, we'll talk about like the mouse and cat games. So I think Mandy was saying, well, we're never out of jobs because there's always new threats, there's always new problems coming in. And the last point I want to make about continuous threat monitoring is the fact that we always try to find different ways to prevent things from happening. And we know that, we get at a home, you have windows, you have doors, then you have locks. But that's never enough because there's always other ways people can get in. So not only having prevention, you have to have detection. So the monitoring is important.
So how does it work then? Let's dig in a little bit in terms of you're continuously monitoring for any suspicious activity that could represent a threat. What kind of data are you using? And actually, when it comes to how you identify a threat using that data, what's the process?
There's a lot of data. I think throughout the last 2 days, I sort of heard data, big data, AI, many, many times. If you think about security, it's actually not just security-specific data that's useful. Think about, in the day you start badging into the office. That is a security-related data. And think about sometimes you log in remotely through a VPN. That's security-related data. But your travel information, the fact that I'm sitting here in Guangzhou, it's not necessarily security-related. But if you piece all them together and say, well, why is Haiyan logging in from China and somehow a badge read happened in San Francisco? And that only happened within an hour. Can she travel that fast? So when you bring all those things together, you detect anomaly. You detect something that doesn't make logical sense. And that just raises flags. And you can start looking at, is her badge got stolen? Or is her VPN token got stolen? And what's going on with the travel? So you can decide what exactly is happening behind the scenes.
So I want to talk about some of the types of attack we see. We all know the phishing attack where you get an email with a suspicious link asking you to click, and that's a way for an attacker to get into the network. But these have become a lot more sophisticated as I understand it. So right now, what are the kinds of attacks we're seeing that have become more sophisticated? How are they being carried out?
The sophistication actually is sort of a result of many different type of breaches that happened over the years. You may still remember 2 years ago was all this identity theft, right? It was like, what happens to them? Once people get those information, they got your identity, they could hijack some of your accounts. Once they get your accounts, they can understand your history. They will gain a lot of knowledge. And in the US, the biggest sort of government-related attack was the Opm attack. And that particular one certainly made a lot of information about the government employees, even things that they go through the clearance process. So all of this information get used to make the phishing attack a lot more sophisticated. It used to be something you can just say, oh, I'm not going to respond to that. And over the time, they make it so personalized, you really think it's from your relatives, your colleagues, and in our busy days, we don't always take an hour try to figure out what's going on. We have 2 minutes, we respond. So that really is over the time. They get a lot more personalized. They get into your system. And once they get into the system, there's different technologies. You probably heard about all the ransomware. And the latest news is actually 2 of them just got indicted. They're actually from Iran, and there's no border anymore on how this can be carried out, and impacted many municipal governments in the US in a big way.
And you mentioned it there, one of the big problems is the availability of personal data now that has been stolen in personal attacks and ends up perhaps on the dark web. The dark web, of course, think of it as another layer or dimension to the regular web we see. I actually sat with a cybersecurity researcher recently who showed me around the dark web and the very interesting parts of it and what you can actually buy there. And for a few cents, you can buy a whole set of data. But you can also buy exploit kits, right? You can actually buy custom-made out-of-the-pack hacking kits to go and attack a business. You just need a tiny bit of technical knowledge, maybe, and that's enough. Is that the biggest problem, actually? How do you counter the fact that it's so easy now to launch malicious attacks?
You're absolutely right. I think that's probably a process of all those hacking tools become so accessible and democratized that ability, right, for a lot of people, there's several things. Security and IT don't really sort of separate. Sometimes we think about security, people only think about, okay, what are the tools to prevent? Actually, a lot of those exploit tools are based on that you have vulnerabilities, you have things you have not patched. So to really make your enterprise better prepared for those things is to really have the right IT hygiene, to understand what's being exposed and what's available for patch. So that's sort of the one thing that's not necessarily security-centric, it's IT-centric. And the other thing, I think, going back to your beginning question, is continuous threat monitoring. You just have to have that vigilance. You have to have the ability to always, hopefully, I think right now, sometimes we in cybersecurity are a little bit paranoid to say we can never stay ahead, but to become a lot more proactive through that continued threats monitoring, through try to really understand what's coming, what's happening, I think we have a good chance to really provide much better security for our enterprise.
And you mentioned cat and mouse at the very beginning of our chat, and that's part of the potential challenge here, is that as cybersecurity industry brings more automation and AI into the process of countering cyber attacks, presumably those attackers are then going to look to bring automation and AI to the things they are doing.
Yep.
So then how do you counter that? They're trying to always be one step ahead, but then how do you stay one step ahead with the continued automation? Does it then eventually just become a fight between two AI algorithms trying to beat each other up, essentially?
That's very much true. I think one of the things that I also gathered from the last 2 days is people definitely talked about data is such a powerful resource, right, for us to use. And I think one of the challenges for the cybersecurity world is there's a lot of openness and sharing in the adversary side. You know, that you talked about just for a few cents, you can buy the tools. I think what that means for all of us is really trying to protect our enterprise or our cities or agencies is we need to really work together. Security is a sports, sort of, that's not an individual one, it's a team one. And the more we can really work together, the more we can share intelligence, the more we can share data. And I think in many ways, if we can leverage the power of data, we can leverage the power of automation and machine learning, even AI, in a way that we put together the intelligence of the community and we work together, we'll have a much, much better chance.
One very sensitive topic, but one that is certainly on the top of many business leaders' mind right now, is the role of the nation state and hacking attacks launched by nation states and nation state-backed actors. These are often long games, hard to detect. So how do you counter those kind of attacks?
I think the concept of APT got started probably a few years ago, and people, this is advanced persistence threats, and then this is another way to say it's the long game, right? Yeah. So for many of us in the industry, when you think about nation state and the role and the cyber sort of attacks, I always sort of take a step back and think about, is this a new game? In many ways, it's not a new game because the needs for intelligence gathering, the needs for each nation state to always think about how to better their defense and offense is a need that has always been there for decades or hundreds of years. It's the digitization, is the connectivity, is the way that people is always on, really changes the rules of the game and changes the mechanisms. So we always recommend that from government on to really think about what instrumentation you have in your infrastructure. Can you gather data fast enough to really understand what's happening? And what control mechanism you have built into your infrastructure? So if something does happen, do you have a way to really contain the impact and especially really remediate? It all goes back to the very beginning, continuous threat monitoring. But the one thing I would say, this cyber warfare versus conventional warfare does provide an opportunity for many different sort of nation and state. It's leveling the playing field because it does not require as much as a capital investment to be ahead. On the other hand it's not just a human capital investment. Everything is happening at machine speed. Automation, data, analytics are super key.
And so does that mean you're perhaps seeing smaller countries, perhaps that don't necessarily have a huge military or something like that, being able to play in the cyber warfare space?
Absolutely.
Where they can't in the physical?
Absolutely.
And tell me this, Haiyan, why do people in your industry, whenever I ask them, who are the nation states launching these attacks, tell me that attribution is so difficult? Why is that?
Attribution is difficult, and attribution is difficult because there's so many technology that's being used try to disguise where this is coming from. Or there are so many different reasons people may want you to think it's from other places. And try to really trace and attribute, it takes a lot, and as you know, it's very sensitive in many different ways. But I think if you look at a lot of the things that has happened, there's definitely a good set of nation state that usually make the list.
And just a very quick one on this, Haiyan. As you look towards next year, what are some of the big themes when it comes to the trends to do with threats, but also prevention that are going to emerge or continue to grow stronger?
I think just sitting here in China and listening to a lot of the investment, and IoT is definitely a big area, right? IoT has, in many ways, really changed the way we live. And whenever you have new technologies like that, we use a term called you open up new attack surface. So definitely would expect that next year we'll hear more about even more, IoT-related security challenges. The other trend, I would say, this year, I think I heard some of the previous speakers talk about data privacy. And the customers, the users, a lot more aware of what it means to them. And I think the GDPR regulation, and there's many different sort of compliance requirements coming from different regions and countries, hopefully, or I don't know whether I should be hoping for some enforcement news coming out and people are going to take more action. In many ways, for the security and compliance world, sometimes it has to be a bad thing happened, and then everybody take notice and something better would take place.
Very interesting. Look, we've got about a minute left, so I want to open the floor up for a question if someone has one.
Thank you. Hi there. You've talked a lot about the attacks on data and personal data, but what about on a broader scale? So an attack on energy or power or utilities, what are the real risks of that?
It's really high. That's why, coming from the U.S., there's special regulations, there's special groups, and we call it, ISACs, which is a sharing community. They are sort of many different intelligence you can sort of read about. There may be already attacks in those. But it always starts from, in many ways, the weakest link sometimes is us humans. So the phishing attacks is usually the entry point. I think for all of us who are in that industry, whether we're protecting or we're the customer of, those, is always making that demand and making sure the awareness and mindset is right. It's important.
Fascinating insight, Haiyan. Thank you so much for your time, Haiyan Sung from Splunk. Thank you very much.
Thank you.
Thank you very much, Haiyan. Thank you very much, Aljon, as well. A whole new meaning to the phrase, let's go fishing. Well, I wish I had a yuan or a dollar for every time we've said the word data. And we've really supersized it, haven't we? It's not just data anymore, it's big data. And we need somewhere to store all that big data. So let's talk now to a Singapore-based startup that is building a decentralized database that businesses can use to store that big data, and it's going up against the big guys as well. Let's have a chat now with Louise, once again, from the Financial Times, and Pavel Ban, who is the CEO of Bluzelle. Over to you.
Thank you. So, morning, Pavel. Now tell us, we're seeing blockchain everywhere, whether it's trade finance, harvesting rice, diamonds, even we've got Long Island blockchain tea now. What is this a bubble? Is it just a jargon that's going around? Why should we be believing in blockchain?
I think what people need to really look at blockchain is more like the internet. So it's an infrastructure, it's a new internet protocol that allows us to build these applications. So eventually in a couple of years, you won't be thinking about blockchain and trade finance. It'll be just trade finance just works better, or supply chain works better. So I think so it's not really a bubble, it's just technology. And once we see the real applications being used and demonstrated by blockchain, then that's going to make people just, it's like we don't mention e-commerce as, oh, it's internet, it's just e-commerce now, or messaging, same thing.
So how does a startup, I mean, like yourselves, or how does somebody go about differentiating themselves and carving out a market within this infrastructure that we're talking about?
So what we found was that the current internet as it exists has some inherent problems, security problems. It's very centralized, and as you know, the person from Cisco, Guy was talking earlier, you've got so many devices coming out there, 20 billion devices. That's like almost 5 devices for every connected person on the planet. The current internet just can't handle, and the amount of data that we're consuming, sending, transmitting is exponentially growing. All the data breaches you've been seeing from anywhere from Under Armour to credit scoring companies to Cathay Pacific. We have these breaches because the current internet doesn't solve those inherent issues. So for us at the infrastructure level, if you take blockchain principles, so we're not technically a blockchain, but we're taking the principles of peer-to-peer networks, decentralized nodes, consensus algorithms to validate data is correct and whose it is. If we apply that, then we can create a better decentralized internet that allows for better security, scalability, and data integrity.
And in terms of, you know, where we're seeing this build out, I mean, are there going to be people doing lots of decentralized things, or where are we going to have a kind of common backbone? I mean, to go back to your analogy of the internet.
Yeah, what we see is you're going to have all the same services that we see in the current internet, so you have applications that are built on operating systems like iOS, Android. Well, now you have new operating systems such as, you know, Ethereum. Then you have these applications, decentralized applications that come like trade finance. But now you have file storage like Dropbox, Amazon Web Services applies that. You have Oracle for database. So you'll have that replicated with decentralized services. So us, Bluzelle, we're taking care of the Oracle database side. Somebody else is taking care of file storage. Somebody else will be taking supercomputing.
Now, how does this fit in? If we go back and we look at the big picture where, you know, we've got a lot of countries, parts of the world led by Europe with GDPR, really honing in on data privacy. How does this gel with the sort of thing that you and some of the other blockchain people are doing?
So for us, it's GDPR is a big thing. So what we talk about is the concept of data as a currency. And by that, what we mean is just because you use Twitter, you know, we're tweeting here, Facebook, Instagram, you think it's free, but we're actually paying for it with our data. Now, you know, I know if I use a product, there should be a cost, but I do have a problem when those companies, those centralized companies, are either not storing that data properly, securely, they're monetizing it without me knowing or getting anything kickback, or fundamentally they could be even manipulating that data. So what we're saying is data as consumers, we should start looking at data as much as we manage regular currency. These big companies like Facebook, Twitter, Google, they should almost conduct themselves like banks. So if I don't know, bought something from a shopping store and that store got robbed, that money's gone. I still got that service, fine, the money passed to them and it's gone somewhere. But when Cathay Pacific gets breached into and they report to me that, hey, your personal information is gone, well, there's no repercussions. Somebody's misusing that out there. So these companies, people need to start being more aware of managing their data as a currency, holding people accountable. So what decentralized networks like ours, a database, does is it stores the data in a much more secure manner. If somebody tries to break in, it's using decentralized network, they really can't. Even if they did, what we do is a concept called sharding. So what that means is, an easy way to explain it is, let's just say you had an email list. We took that email list, replicated it on a bunch of plates 1,000 times, broke all those plates, and each little piece was spread out on a bunch of nodes around the world. So even if somebody got into one, all they got was like a little piece of a puzzle. They can't take over the whole network. So going into that, our goal is that you can build services on top of that, such as like a data wallet, which gives you control, the user, and consumer, and saying, yeah, I'll give Twitter or whoever access to this information. If they're reselling it, there's a way for you to get compensated, or if they're selling to a company that you don't like, you can turn off that authorization. So it's really about giving that consumer and businesses individual control over it.
I mean, that's obviously from a consumer point of view a great thing, but how do you make that mesh with, I mean, are we going to come to a stage where Facebook or Twitter will say, yes, here's a cent for every 100 pieces of data or everything that I can share with people? I completely see how you want the Cathay breach, but how do you start taking charge, taking back control of your data and selling it and getting, because you need to get people on board, right?
An easy way is like you said, GDPR, the European companies have reached out to us, consumer-facing ones, and what they've said is, we're collecting this data, and they might be sharing that information with their partners or selling it. Now the partners are coming back to them saying, did Louise actually give you authorization to that data? And how do I know you didn't manipulate that? So by using somebody like our database with this consensus algorithm that guarantee that you gave authorization, we have proof of that on, basically on the blockchain. No one could change that data except you or, let's say, the consumer company who's collecting that data. So that guarantees that. So the companies are there, the partner is saying, okay, good, now I can trust that, use that. And if there's some monetization, that's up to the, let's say if it was a wearable company, that's up to them to either share it with you, or maybe they give you incentives or rebates or discounts. But it's basically creating a new data ecosystem that's completely trustworthy, and then all the parties can know that all the, right checkboxes have been checked.
And have you, I mean, this sounds like a great idea, but have you got a time frame on this? How many, because you're effectively talking about creating a whole huge ecosystem that brings various parties on board. Is there a time frame that we could be seeing this by?
Well, right now, our next version of the product, our beta, is coming out next month. That will be able to show all the main features, how resilient the network is, that if we capture somebody being, let's say, a bad actor trying to manipulate that data, our system can catch it, boot them off, like a rogue node, so they're not part of the network anymore. We'll be able to demonstrate that all next month. We have some consumer brands already talking to us about building certain pilots and use cases that hopefully we can demonstrate over the next 6 months. And it's really about not us creating this massive ecosystem, it's about XYZ company controlling their own data ecosystem where their consumers are happy, their partners and their suppliers are all in that one system. It's just powered by us.
Right. And is anyone doing anything similar in other parts of the world? I mean, is something like this happening in the US, China, Europe, anywhere else?
What's interesting in the decentralized services part is Southeast Asia, where we're from, where there's some parties I know who are building supercomputers, and or cloud hosting, but decentralized.
In Southeast Asia? In
Southeast Asia,
right.
Or applying that. So what happens is, let's say if there's a product in Indonesia, they might not have the best infrastructure there with using the centralized current hosting providers. Well, by having a decentralized, that means uptime is much more stable. It's always there. If one node goes down, somebody else is right. And companies are starting to get attracted to that. So in certain areas where their infrastructure is still catching up, they actually have the opportunity to leapfrog current existing, developed places and say, hey, let's start using decentralized infrastructure.
Right. So in places like Indonesia and stuff, who takes charge? I mean, is this something you have to have the governments on board with, regulators on board with? Who do you need to bring on board?
From what I see is that you don't you need to understand regulatory rules there. So in places like Indonesia, the nodes or the hosts have to be in Indonesia. It can still be decentralized because we're not dealing with payments and money. So you don't really need government approval. You just basically create a secure network that abides by the rules of that place.
And how about things like data sovereignty, places where you've got to onshore data? Does that come into this at all?
Totally. So for ourselves, because we're building a decentralized network that's going to be all around the world, we have to, in certain areas where there's China, Indonesia, as we grow, we're going to have to geofence and say, hey, we can still create a decentralized network, but we can make sure and prove out all the nodes are actually in that region. But some of the things ASEAN is doing themselves is trying to open up those borders between those Southeast Asian countries and saying, hey, we all trust each other, we're all doing business with each other. Let's have some of the hosting providers be in another country because it just benefits everybody else.
But does that end up happening? Because we saw when ASEAN was created, car makers, everybody saying, oh, great, there's no borders, but kind of didn't really pan out, right? Is it easier for things to pan out in the digital space? Or given what we're seeing with things like GDPR and onshoring of data, I'd be a little bit more skeptical about that. But, I mean, how do you see that panning out?
I mean, it's going to be a battle regardless. For us, it's, I think once they start understanding the concepts of decentralization, I mean, the first thing is blockchain. So the entire region is starting to get on top of that, understand it for payments. Now the next thing is going, how does that apply to decentralization? And as they start understanding that concept that, hey, there's security needs, the privacy controls, where it matters is still, you know, answered for and addressed, which a centralized place can't do, I think they'll start coming around and saying, hey, this is actually better for us.
Right. And just while we're on the sort of reputation and so on, clearly for an awful lot of people, I'm sure even here, and certainly non-experts, the first time they came into touch with the whole term or concept of blockchain was via Bitcoin, which is obviously having a really ghastly time at the moment. Yeah. How much is that ricocheting back onto reputation and thoughts of blockchain, or do you feel that people have now, and I'm talking governments and regulators, have got that was just a building block onto Bitcoin, but it's a very good building block that could be used in other places? I mean, how much is it tainted by?
I don't think it's tainted at all. It was years ago before the, you know, Bitcoin and blockchain came into the mainstream, like 2.5 years ago when I moved to Singapore, no one wanted to talk about cryptocurrency or Bitcoin at all. All the banks, insurers, events in Hong Kong, it was all about blockchain, the technologies, the applications that can be built. It was only in the last 1.5 years that the cryptocurrency as an asset started to rise up, and now, you know, there's a bear correction market, but the applications are still being built, and just like in any way, like during these times, the real products that are being built are the ones that would potentially thrive. So then maybe in the, you know, 6 months later, cryptocurrencies will start, as an asset class, will start rising again. So there's a clear differentiation between blockchain and cryptocurrencies in the business world, and the companies that reach out to us about what our product can do, you know, they basically have their still innovation centers, their blockchain centers, and they're not, none of that's slowing down.
Right. So what are the biggest challenges? What keeps you awake at night?
For myself is, as a startup, I know we'll build a great tech and a product. So the one that always is identifying that first customer segment, like what you said, is what's going to kick that off? Who is it, right? And as a startup, you're always looking at, is it this company, or is it this type of group, or this one? And then all of a sudden, you know, like I said, consumer products started reaching out to us because of GDPR issues. We're like, whoa, that is very interesting. And then, so that's really it, is always you're focusing on distribution. Who's going to use this product that you can? And once you do get that, how do you scale that up?
Right. And it presumably is one of the things that is more easily scalable, though, no?
Once people start using it and understanding it, it is a product that then other people can, you know, can sign on and use it. Fortunately, we are, because we're a database play, aimed at developers, a lot of it's touchless. So once word gets around, it does move fast, because if you look at other technologies that are at the infrastructure level or aimed at developer tools, once they start seeing it works, all of a sudden they jump on, and then they can start moving pretty aggressively fast and saying, hey, this, at the heart of it, they don't care about blockchain, cryptocurrency, nothing. They're like, does this solve my immediate needs as a developer? Hey, it's scalable, it's managed, I can deploy it in minutes, it saves me a lot of development time. That's what attracts them.
Right. So basically, it's not jargon, it's actually going to put us back in control of the data that Facebook and everybody else has been monetizing on our behalf for all this time, right?
Well, I'm not saying those guys are bad. I mean, they build great products that we use, but there should be more accountability, and I think products that Bluzelle brings and other decentralized, it'll allow for that accountability, and the education awareness of yourself, people in this audience to know is like, yeah, what is happening with my data? How is that being used? And I should just give authorization to it.
Cool. Mm-hmm. Okay. Well, thank you very much, Pavel, for taking the time. Certainly sounds great that we have data as our own currency again. Thank you very much.
Thank you.
Thank you very much. Thank you, Pavel.
Thank you.
Thank you very much, Louise, as well. Well, we're really citizens of one big porous world, especially when it comes to e-commerce. So how do you safely and securely conduct e-commerce across borders when you have to also take into account all the legalities, illegalities, the tariffs, the taxes, and all the various other things that you need to consider depending on where you are in the world? Well, let's try and get some answers on how that is to be done. We have Jiyoung Fan, who is the head of digital trade with the World Economic Forum, WEF, and I believe, sir, that we actually have something in common. Mr. Fang, I believe on the very first day that you and I both mistook that little round, white thing that looked like a grape or maybe even an onion, and we popped it in our mouths, and it was the hottest thing that we've ever come across in our whole world. So we are partners in pain.
Exactly. I thought it was a sweet onion. And so I couldn't breathe and talk for a couple of minutes, and wait staff took a pity on me. So we need app for that to detect the spiciness.
We're very glad to see that you found your voice once again. So, Sherry, over to you.
Thank you, Mandy. I can't believe I missed out on that experience, but now I'm going to, I don't know, try to go for it, being a Korean myself, and maybe I can handle it better than Mandy, maybe. But let's talk about what's happening this weekend. I'm just going to sort of kick things off on a serious note. We've got G20 meeting happening. We're very much eyeing that meeting between President Trump and Xi in China. What kind of process do you think it will be?
Well, we certainly hope there will be some good news, but it's really hard to tell. We don't have a crystal ball to tell. There was some good news coming from the White House yesterday. CNBC covered it, so that's definitely what we're hoping. You know, as our president said, you know, trade is not a weapon, right? So we really, the two sides really need to find a way forward. But that being said, you know, trade is just one aspect of the U.S.-China relationship. There's a broader geopolitical and economical issues at hand. So we do encourage two sides to continue dialogue and negotiation, and the World Economic Forum will be happy to play a role in that process.
What do you think we need to see this weekend to sort of have that relief of sigh of relief and think that, okay, trade is not going to be compromised?
Well, I think from the industry side and from other stakeholders, if we can have some kind of moratorium on the tariff, that would be great. But I think that's what everyone's hoping for.
So now let's bring it back to this technology theme that, of course, we spend a lot of time this week talking about. Fourth industrial revolution, we use that phrase. Are we there yet?
I think we're living it right now. We're in China, and as most of you guys know, the biggest news coming from China in the past week or two was the gene-edited babies. Right? So it's not my lane, but that's just a good example of how technologies have far outpaced the speed of regulations and policy. And there's a big gap in between, and the whole society and the government, private sector, you and me really need to get involved in providing and creating the framework on how technology should evolve.
So how does that affect what you do at the forum, at WEF, as the chief of digital trade?
Yeah, so the forum created a center for the fourth industrial revolution last year in San Francisco. And one of the projects at the center is digital trade. So the definition of digital trade is, obviously, it's fluid. There's no strict definition. But in this context, we can just say it's international e-commerce for both goods and services. Digital trade has been growing fast. It's 12% of international trade now. And again, it's growing at a very rapid rate.
Some of the conversations right here in this room this week was about how there is that advancement in technology, but we're not really ready yet on the regulatory side. Do you agree with that?
Absolutely, absolutely. That's exactly what we're seeing. So we talk about e-commerce in China. We talked about yesterday how things can be delivered to in 1 hour and all the amazing things we do in cross-border trade. But if you look at the WTO, there's actually no definite, the members have not agreed on e-commerce set of rules yet, right? That's a perfect example is that we're 2018, so absolutely, there's a big lag.
So you've been in the private sector, public sector. I think you're just perfect for this kind of conversation at East Tech West. What kind of trends are you most excited about these days?
Couple, but one I would say is the digital trading services. Trading digital services, I see that as a major trend in the next decade. So, of course, as I said, digital trade involves both goods and services. So, give you an example. Yesterday, VIP Kid, that's a perfect example of trading services. American teachers providing educational services to students in China. And it doesn't stop just as education, right? I used to work at Airbnb hospitality cross borders. If we take further, telemedicine or professional services, like accounting, with the ability of telecommuting and also with language translations, apps or other resources, I do see the trend of digital trading services as a major driver for the next wave of globalization.
So let's pick up on the last phrase there. Next wave of globalization. What's the next big thing in terms of digitalizing services and really advancing, the level of exposure that one service gets globally?
As you mentioned before, it's really the regulations, the policy framework. Same example, we were talking about cross-border trading services, licensing issues, right? If you're a teacher, how do I know you're really a teacher if you're providing educational services to me? Or if you're a doctor, you're on the other side of the screen. If you're here in Guangzhou or I'm from San Francisco, I know if you're working in a hospital, you have a license, right? But if you're on the other side of this phone, how do I know you're actually licensed to do that, right? So countries and international organizations need to provide and build that structure. For example, e-depository for licenses. So platforms can just link to that and check and make sure you have the license and provide the service accordingly. Again, that kind of governance framework has not been established yet.
So it could be very difficult, even if you have this brilliant service, whatever that is, if the regulation is very patchy globally, then you can't really take it to the next level beyond your country, beyond your region. Is that what you're saying?
You are absolutely right. That's the case.
Oh, okay. So a little bit of managing our expectations at this point. You worked with, or at, I should say, Airbnb. What kind of experience was it? And do you see that, not a similar kind of services, but what, from that experience, how do you foresee the next big thing could be in terms of digitalizing services?
I think my experience at Airbnb was fantastic. I think it helped Airbnb to enter the Chinese market for both foreigners coming to China as well as Chinese millennials who love to travel. And when they travel overseas, they love to use home sharing apps like Airbnb. So I think for the next, it's hard to predict, but I think when it comes to services, is really the services that affect our ordinary lives. When you travel, you need a place to stay. Or even in office, secretarial services, office work. It's those things that touches our everyday life, that apps or websites like Upwork, those freelancer websites that really can provide, for example, a coder or a virtual assistant in Philippines or in somewhere Eastern Europe with a customer in Europe or China. It's really that ability to bring people from different corners of the world and provide their services instantaneously. I think that really will take off.
So with this kind of technological revolution, we've got products being improved, services hopefully being enhanced. So what about jobs taken over?
That's always been a tough question.
So I guess my question is, what kind of jobs can be saved?
So I'll use myself example. I'm a lawyer, right? So there are apps out there, the AI out there that can read contracts way faster than I do and can identify the governing law provision in a contract and takes like a nanosecond, right? But I think what my value as lawyers, for example, in this case, is the jobs require high EQs. This relationship building, right? Whether when I advise the company CEO that do you take option A or take option B? What are the pros and cons on both sides? That aspect of it, I think it will still take a lot longer for.
So coding
AI.
and EQ, that's the future of education, I guess. Now I want to talk about, I want to just sort of pick up on some of the chatter that we had in Nansha from yesterday. The guest was talking about, of course, AI being the equalizer, but I want to sort of broaden the scope and say, do you think this kind of advancement in technology, do you think it really equalizes people and countries in different stages of development?
That's a great question. So at the center in San Francisco, we get a lot of government delegations from all over the world, from developing countries, from developed countries. We also, that's one of the common questions. Leapfrogging is one term that keep being referred to. I think in certain industries, a good example is fintech, right? From Alibaba in China to Paytm to India to M-Pesa in Africa, developing countries have been able to leapfrog in that aspect, as we talk about 3G, sometimes directly to 5G, right? In other areas, again, I want to stay in my lane, but for example, for AI, I'm not an AI expert, but I know that it will require a lot of research, a lot of talent, right? And
early stage investment.
Exactly. I think in that case, the thing is for developing countries, they have limited resources. So for them, it's important to where to deploy that resources most effectively. And generally speaking, it's better to build an infrastructure for digital transformation first. But also, as that said, you do need a strategy for AI, for blockchain, so that you're not caught totally unaware 5 years later and realize that you have totally missed the boat.
So on that note, do you think China is an absolute advantage in terms of, having that state level of push, the interest, and the money?
China definitely has certain advantages, that's for sure. If anything, actually, I think it's the cultural advantage. What I mean by that is that, China started opening up in 78, right? So actually right around here in Guangzhou province, right? So start with experimenting with new policies. So I think with new technologies, it's the same. If you can't wait to develop a full-fledged, perfect laws and regulations, you will need to be able to adapt. Experiment in a local or in a regional level, and then if it's successful, or if it doesn't, take the learnings, refine it, and then push it out. That being said, China does have certain advantages that other countries don't. Chinese government and country can act relatively quickly. It's relatively centralized. So politically, some other countries may not have this benefit. So it's really a balancing act here.
Xiang, we have about a couple of months to go till 2019 Davos Forum under the name of Globalization 4.0.
Right.
I think this word, globalization, really picked up in people's interest, at least for the people in this room and also for our network, since the start of 2017, when Chinese President Xi Jinping really, highlighted that concept at Davos.
Correct.
What kind of conversation do you think we'll be having in terms of globalization, opening up trade in 2019?
I think the essence of the theme for Davos 2019, Globalization 4.0, is that globalization has to be inclusive, right? It shouldn't just benefit a certain segment of society. It should really try to benefit everyone in society, so no one is left behind. So that the current developments, we see it around the world, sometimes we can see the result of the previous globalization not being able to distribute it equally. So really for globalization 4.0, really looking at what's the best way, especially enabled by technology, that the benefits are distributed equally to everyone's, to be inclusive, so no one is left behind.
I know I just have a couple of seconds to go, but I'm going to go rogue because I do have one more question.
Sure.
Speaking of globalization, do you think data will also be globalized, or can it go in the opposite direction because of all these concerns about, built up in protectionism and concerns about not really knowing what technology can bring in terms of risks and security vulnerabilities?
There's definitely that trend, but the key here really is, I think it came from fear, is that we don't know how this would affect our day-to-day lives. So I think in terms of the trend, I think really with data, and actually at the World Economic Forum, that's what we're really trying to do, is bring the stakeholders together, the public sector, private sector, civil society, academia, really build a multi-stakeholder approach. It's not just the tech companies saying so or the government saying so. We really need a multi-stakeholder process to address that issue.
All right, Xiang, thank you very much, and looking forward to the work that you do at the World Economic Forum, and thank you for listening.
Thank you very much. Thank you.
Thank you. When you have the stage, Sherry, you always have the prerogative to go rogue, by the way. And we've also come to the last guest now. Thank you very much, Xiang Fan, and also Sherry Kane. Thank you. So, now for our last guest. Do you remember on the first day that we were speaking with Ms. Ulrich from JP Morgan Chase, and she said that the Chinese traveler is conquering the world one selfie at a time? I think that might have been the quote of the conference. So now we come to the Chinese traveler, him or herself. As you probably know, they're increasingly sophisticated, they're increasingly well-traveled, and so travel services company CTrip is investing heavily in things like AI, cloud services, and various other technology to make the traveler have a much better experience. For this, once again, Jeff Cudmore, over to you. Bring it home for us. Last session of the day.
Thanks. Last but not least, as they always say.
Yes.
Thank you so much, Mandy, for that. And Jane, terrific to have the opportunity to talk with you again. We've had some really interesting conversations up here, both with people at the very early stage of the road that your company has traveled and some a little bit further down the road. What's becoming clear, it seems, is that the investing environment has become a little bit more difficult at the VC private equity level. I wonder if you could just offer us some reflections on some of the challenges as you see it for perhaps other companies in your space at the moment trying to get a foothold. I mean, maybe that's a good news story for CTrip in a way, but just explain how you see the travel and leisure sector.
For travelers, I think the segment we're targeted at is relatively resilient. So we are targeting at people who are making 10,000 USD per person. And that segment relatively is more resilient than the people making less money. So what we have seen is safety is very important for these travelers. Secondly, the direct flight routes is very important. Whenever the airlines open a direct flight, we can see the increase to these countries or cities. Thirdly, the people who wants to go to Europe or Australia, New Zealand or Asian, I think they all want to feel to be welcomed. And that feeling is also very important. So whenever I travel around the world, when I saw these cities meeting with the state governors, I always try to make sure if they have the will to receive more tourists, they have these three things in mind. And we also designed a program called China Welcome China program. So Chinese customers, on the first couple of days, they're very daring to try different food, but after a couple of days, they will miss their food. They like to have hot teas, little things will be very important. The road sign, if they have a little Chinese on it, so they feel, very comfortable, that's all very
So all of those things are about tailoring the specific experience to the Chinese traveler. But just circling back to my first question, there is a sense that the Chinese economy is slowing at the moment, and the middle-class traveler, who is just emerging in many senses, has less disposable income to spend on your experiences. Are you seeing any of that in all the data you collect? And what does that mean in terms of maybe profitability and margin for you?
So for us, I think if we look at our diamond users, no impact at all. If we look at the new upcoming young people, instead of traveling, for example, abroad, now they're traveling domestic. And for certain countries, if the currency trades against RMB negatively, then these regions will be impacted. But if Chinese dollars holding against certain currency at a steady level, it's not impacted.
One of the reasons it's so good to have you here is you are a big user of data, and you've invested heavily in systems that allow you to mine and use that data to react very quickly to trends. Can you give us a sense of just how quickly you're able to change the pricing of what you're offering, a hotel package perhaps, or a flight plus a hotel, based on the feedback you're receiving? How quickly does that process happen?
Oh, that's instant. So we connect with all the hotels. Every day we have about 300 million registered users based on where the customers are. We try to reach out to the suppliers and find the best rate for our customers. And we also innovate a lot of new products. So for example, China right now has 2/3 of the high-speed railway, and the speed is 50% faster than the rest of the world. Yet the price is 1/2 of the price we have in Europe. So that gives a huge potential. So CTrip innovated this product called high-speed railway package. So along the way, when you travel, for example, we went to the Hollywood of China, where all these movie was filmed. It used to take 4.5 hours. Now we can get there by 1.5 hours. So we were able to negotiate very good deal with the hotels, bundle it together. We'll negotiate very good deals with the attraction tickets, bundle it together. So that is something that, based on our data, we saw our customer has the need. We reach out to the vendors and enable, using our huge volume, negotiate very good deal for our customers.
Now, you've made investments overseas, and international expansion, I think, is one of your key objectives for next year. How frustrated are you that you don't have the access to the same kind of data, or that actually the infrastructure or the setup reacts very differently to how you expect it to behave based on your experience here?
Yeah, we made a very good investment, two very good investments in UK company. One is Skyscanner. They have about 100 million users at the MAU. So their data is very important for us. And the brand is very strong. Their strength is in Europe and the rest of the world. So we collaborate very closely. Before CTrip made the investment, Skyscanner is a price comparison engine where it compares all the prices, but when you select one vendor, it will take you to the other website. Now, in the PC world, that model works, but in the APP world, the user's experience is not the best. So what we do is we insert our direct booking facility on their website. If you select trip.com, which is our brand outside of China, you will be able to fulfill everything within their sites. So the conversion rate increases. We're able to cross-sell hotels, etc. So it has been very successful initiatives on our side. And so we will leverage their knowledge. Another investment we made is called Travel Fusion. It's a B2B small company, but they are a traffic hub for low-cost carrier. Again, before CTrip made the investment, the growth probably was somewhere around 10 to 20%. But after we made the investment, every year they enjoy 50% growth because the volumes you should bring them is just tremendous. Margin is very high. So that's type of synergy we would like to see. 1 + 4 = 5.
There's a very big focus at the moment on privacy and data usage, and some companies in the West are under a lot of pressure, like Google and Facebook and so forth. Since you're a Chinese company in the technology space that's already been able to make the leap and access data in the UK, could you share perhaps some of the challenges and some of the frustrations and how you've had to modify your approach to fit in with different data privacy regulations?
Yeah, we are quite young in terms of globalization. So in a way, it's good because we're very small, that portion. So we try very hard to stay in compliance with all the rules and the regulation. But again, I think the big player in our portfolio are the companies we invested already in Europe, in North America, etc. And these companies have the experience how to work with the regulatories and make sure they are staying in compliance.
Which is a very interesting example, because people in the Western business field have complained that they feel they need to partner to come into the Chinese market. What you're saying is actually you were pleased to partner going into the Western markets because it got you up to speed very quickly.
Yeah, exactly. I think in a way, globalization is scale your technology on the back end. So all your sourcing, hotel is shared by the global customers. But in terms of user interface, UI design, language, service, marketing, these are very localization. So in a way, part of the globalization strategy is localization strategy. So it's very important for us to work with the local experts.
As you look at 2019, I've talked about your international strategy, but what else are your key deliverables? What are you planning for next year?
Yeah, I think we have two fields, two tremendous growth ahead of us. First of all, within China, although CTrip is a very dominant player in China, we still only accounts for maybe 7 to 8% of the overall travel market. And that market is, if we are talking about GDP growth rate at 6%, the industry will double that to grow at about 10%. And CTrip normally can double that number. So we're looking at a very fast growth still within China. So further penetrate into the area where the GDP growth per capita is growing will be very important for our domestic team. The second thing is also because China is so huge, we have 1.3 targeted audience ahead of us. So we hire 8,000 engineers, develop a network originally designed to be utilized by Chinese customers. But if Chinese customers can use it, why people in Korea cannot use it? Why people in Singapore cannot use it, right? So that network is very scalable. So our task is making sure the great assets we build is not only limited by utilizing by Chinese customers, but also we are able to letting the customers outside of China to use that network.
Something that I know you've been talking about and looking at is smart hotels. What innovations, including smart hotels, are the traveling public going to see in the next few years that maybe they don't know about yet?
Yeah, I think smart hotel has many different stage, different phase. So for example, we have worked on the facial recognition. So if facial recognition is done, you can automatically check in. And on the phone, we have a smart key. So on the key, you can turn on your air conditionings and you can get in very easily. And a lot of people also says, oh, if the robotic technology takes over, maybe we can use robots to carry your luggage to your home. And I think it will happen because the labor cost inevitably will increase. Using machine to do something that is logic, that is programmable, is very feasible way to make sure customer is satisfied and efficiency is improved.
Do you find that the Chinese market is more willing to accept this technology than other markets you operate in? Give us a sense of where you find the take-up easier. Yeah,
I think for CTrip, we have 50% of the customers are customers younger than 35 years old. 70% is younger than, so that number is very big. And Chinese people are very innovative. They like to try. I think an idea hotel room in our young people's mind will be a Star Wars hotel or something, you have little futuristic theme designed in it. I think that will all happen. I think wherever you see a design, there will be a need, there will be an opportunity.
Tell us something that people don't know about CTrip. I think your company is well recognized in this marketplace and you're very well known as a pioneer in this area. But perhaps share with our audience something they won't have heard anywhere else, either about you or about the business that isn't commonly known.
CTrip is not only an online company. I always tell our young employee with an average age of 25, 26 years old that their mission is not only issue a ticket, booking a hotel room. Rather, when they do that, they are linking the world together. So in Chinese teaching, it's always better to travel 10,000 miles than to read 10,000 books. While we're sending people to the world, bring people to China, we hope we can promote global peace, promote international exchange. And I think in this moment, it becomes very critical for the benefits for the global people. The second thing we feel very proud of is, since I'm the only CEO in the high-tech industry in China, I feel tremendous responsibility to bring up the female leaders in the company. So we have adopted many policies that is very encouraging and inspiring. For example, when we still were under the one-child policy, our employee, when they have to the second child, they will pay a fine. So I would authorize a non-interest loan for our employees to pay off the fine. And now we have two-child policy, but we still think we should do more. So what we do is, for a lady who is pregnant, we give them taxi for free. When the baby is born, we give them 800 as a welcome gift, 3,000 as education fee. When female comes back to work, we offer flexible hours. And now we start to hire lots of people who have degrees in both countries. And they spend more time in college. So instead of having the female workers to struggle, should I start a family first or should I work first? If they decide to have their egg freezed, CTrip will pay for that. And that is very progressive. And our female employees really have enjoyed the policy. I think that gives them a good option so they don't have to fight when they make the choice. So I hope with all these progressive policy, we will with the government and with the enterprise, with the individual family, we will bring the population issue, solve the population issue by contributing our part to China.
Jane, thank you so much for being with us. It's been a real pleasure listening to how you're going to model the company going forward. Thank you.
Thank you so much for having me. Thank you.
Thank you so much to Jane Sun of CTrip, and thank you very much, Jeff, as well. So we have actually come to the end of our program for Day 3 of East Tech West. It's gone very quickly, hasn't it? I have many thank yous to make. First of all, thank you. You've all been a wonderful and attentive audience. Thank you to all of our speakers who've been inspirational and have given us many, many, many things to think about as we leave and go back to wherever our hometown is. I would like to thank our sponsors and partners, without whom none of this would have been possible, to the Administrative Committee of Guangzhou Nansha, Development Zone, the GAC Motors Company, Yueshu Group, China Evergrande Group, Huawei, China Southern, and of course, LN Hospitality. Their staff have literally catered to our every need. I'd like to give a big thank you to the crew, events team, all those people on the floor, behind the scenes, out the back, in the lobby, everywhere, who have all put this together and literally worked around the clock. And thank you also to my colleagues at CNBC who've been up on the stage answering and asking all the tough questions and hopefully making it very informational for you as well. We do have a standing lunch up in the lobby, and stationed around the lobby are a number of exhibits. Please do go up to those exhibits. They're showcasing some of the enterprises in this Nansha area, and also showing you some of the really cool technologies that we've been talking about. You can touch them, feel them, and experiment with some of those exhibits. There are also 2 site visits, remember. You do have to register to make sure that there is a seat on the bus for you. As soon as you go out of these doors, there's a table where you can put your name down. One is for Minju Bay, it's an exhibition center, and the other one is for Cloud Walk, which does sort of cool fintech for the Chinese banking industry. And certainly, last but not least, Let's give a massive round of applause for everyone who's been involved over the last 3 days, because it's been so much fun getting to know all of you. And we do hope that we'll see you here, same time next year. Before you go, for those of you who are from the government of Nansha, please do come forward. We'd love to take a photo, a group photo up there on the stage at the back, along with some of my CNBC colleagues who are the last men standing as well. So once again, go enjoy your lunch, and we'll see you around the this afternoon.